Everybody, Eric Hendrickson giving you the Mortgage Minute for the week of June 14th. Last week, mortgage rates really stayed steady. We were pretty surprised towards the end of the week. The Consumer Price Index came out, which is a very closely watched inflation gauge, and it actually came in hotter than expected. But instead of rates kind of popping up on the news, they actually trended downward, which was really surprising. But upon further review, it looked like there was a lot of bond traders and investors that were kind of betting on even a higher number than what was kind of being whispered out there, and there was a lot of short covering that had happened regarding that. So it was more trading technicals that gave us a little bit of a reduction in rates, and that stuff usually evaporates pretty quick. So I would look for rates to kind of go back and sit in this trend or channel that we've been in the last several weeks, which again has been great to have. After the initial bump up from a few months ago, we've been remarkably steady. So really looking going forward, I would imagine this week rates will stay in a relatively tight range. The big variable for the week, the Federal Reserve is meeting, and Jerome Powell, the head of the Fed, will be talking on Wednesday. And what everybody's going to be kind of waiting and listening for is if there's going to be any changes to the Federal Reserve's buying of mortgage-backed securities and U.S. Treasuries. As we've talked about in the past, they're buying about $120 billion a month in these bonds to really drive down interest rates, to artificially subsidize the rates. And the argument is, now with the economy being back reopened and inflation picking up, does the Federal Reserve really need to be in there artificially dropping rates? Their argument is yes, because it's just really an opening surge that we're seeing with economic activity, and they're more concerned with the long run, and they're feeling that things might kind of dissipate over the next several months, so they want to keep the foot on the gas as far as really sustaining the economy and keeping rates low. But us in the mortgage business, we're happy to take it. Rates are great, so again, taking advantage of these low rates for refinance opportunities or purchase money in mortgages, it's a great time.